Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
IG later.
Garth, admittedly, it's been a couple of frustrating weeks for traders out there in the market, certainly people who profit from short-term volatility, and that's one of the things that we'll get onto on this week's show. But I know that you want to quickly revisit two recent trades, the first being, well, a slightly older trade, and that is in New Gold Platinum. Not much happening there either, is there?
No, there's not. I mean, it's really been very, very slow recently. If we have a look at the chart, it's up on the screen at the moment. And this is a chart of that platinum ETF. It's basically, this thing represents the platinum price in rand terms. What I'd identified here was that the ETF, or the platinum price in rands, had broken out of the top of this falling wedge structure. And those are typically bullish patterns, and they usually will move back up to the top end of that wedge where they started. In this case, that's 161 rand.
Yeah.
And you can see there's a whole series of overhead resistance there at 161. So I still think it can probably go there. But obviously this trade was built on the premise that we felt that platinum stockpiles were running low, and that we were likely to see the platinum price starting to move up and so on. And what has emerged is that it seems that the platinum mines had much bigger stockpiles than what we actually envisaged. And it almost makes me think that they had actually planned this fight with ARMCU a long time ago, and they had sort of stockpiled additional platinum in order to take them on, and know that they could ride it out for several months. Because notwithstanding the fact that this strike is now into I think it's into its 5th month, the platinum price hasn't really acted dramatically on the back of this. Anyway, looking at this chart technically, there's no reason for me at this point to say that I'd need to cut the trade. I still think that what I see there is valid. Maybe at some point there is still a possibility that those stockpiles will still run low. And that maybe we will see the platinum price beginning to move. But I've been asked by a lot of people recently, is this trade worth hanging on to, because it's really just grinding away, doing nothing. We went in at 152 rand 60. We bought 800 CFDs for our portfolio. We've got a stop loss at 147 rand, and I'm looking for it to go up to 161. But really, it's basically been hovering between about 151 and 154 over the last couple of days. Hasn't really done much. What I think we need from a shorter term technical perspective is we needed to actually break above this dotted line here, which is 155 rand. And if you look at that, you could argue that we may be forming an inverted head and shoulders pattern there. And if we break above 155, that would validate that structure and then take us higher to about 161. So, and I think I'm going to sit tight for the moment, but it is obviously frustrating to hang on to a trade that's not doing anything for us.
Garth, the one element though that might provide a little bit of a kicker would be the rand, no? Because this is a rand, a platinum-based ETF.
That's very true, and we have started to see the rand weakening over the last couple of days. Certainly since last week's shocking GDP figure, we've seen the rand weakening, and that would definitely help this, because this is a rand-based product that represents the platinum price in rands.
And just very quickly, people, for a trader, it's frustrating to have something that's not working out almost immediately, and those generally tend to be the best trades. You've used in the past time stop losses. Is it something that you would consider for this, or until it fails, or you just get bored of it?
Yeah, look, I think I would. You're right that the best trades do usually work out very quickly. In my experience, that's always been the case.
And we're talking specifically about trading here, not investing.
Yeah, we're talking specifically about shorter term trading here. And the fact that this one hasn't really started to kick for us so quickly is a bit concerning. But at the same time, I'm not going to get out of it just yet. I suppose, as a rough rule of thumb, I generally look at a trade over 3 to 4 weeks. If it hasn't begun to do what I want it to do, then I'll often just cut it and move forward and find the next trade. Because the trouble is, having a trade on that does nothing for you. It eats up part of your financial capital, obviously, because you've got to fund the trade. But it also it takes your focus, and it allows forces you to watch a trade which is doing nothing, when often you might find that you'd be better off just closing the trade and moving on to something else which potentially has a better upside.
Yeah. Well, on that note, what about Aspen? That was also the more recent, the last week's trade.
It's also been a rather
particularly uninspiring.
Yeah, it is also rather uninspiring and grinding along. I suppose suppose that's been the story of the whole market, and we'll talk about that when you look at volatility in a moment. With Aspen, what I looked at last week was I first showed a long-term chart which showed that there's a primary upward trend which comes in at around about 172 Rand or thereabouts on Aspen. And you can see that primary uptrend there. The stock's been tracking along sideways for the last 3 months or so. And Aspen tends to do this. It's a stock that runs and then it seems to consolidate in lengthy sideways patterns for a while. And it certainly has done that here. And I would call this a correction in time rather than a correction in price. What I'm looking for is ultimately looking for a break above this overhead resistance, which comes in at about 280 Rand. But what I went in and did it last week was I actually went in and I initiated a half position at 277 Rand. I bought 375 CFDs for our portfolio there. And then my thinking was that I'll add to this trade if we do start to see it breaking out through the top of that resistance. I think I'm going to stick with that strategy. My stop loss is 269 Rand. No reason for me to cut this trade right now. I suppose in retrospect one could argue maybe it would have been better to actually wait for that breakout to happen, because who knows, right now we're sort of waiting in limbo for something to happen here. Anyway, be that as it may, it's trading at approximately the same level as what it was when we went into this trade last week.
Okay, so no reason to cut out of the position yet. Okay, you talk about limbo. I mean, the other word that springs to mind about this market is becalmed. I mean, we're just sort of floating on a sea, waiting for a brisk wind to whip us along. So what is the VIX doing? And that's the volatility index.
That's it. Yeah, the VIX is the volatility index. It's a measure of volatility which comes out of the US. And really, it's also sometimes referred to as Wall Street's fear gauge. So very high volatility is often associated with fearful markets. Very low volatility is often associated with fairly complacent markets. Now, if you have a look, this is interesting. Now, this is the chart of the VIX going back over the last 3.5 years. And what's interesting is that we're currently at record low levels on the VIX. And when I say record low, I mean years and years and years.
So, I mean,
back.
this a true record low.
Yeah, well, I don't know. I think it has been lower than this at some point in the very distant past. But I mean, you have to go back a hell of a long way to find a time when it was as low as this. Certainly in the last 3 years, in fact, even in probably the last 4 years, since before 2007, 2006 even, we haven't seen volatility this low. You can see it's trading down at around about 11%. Historically this year it's been tracking between 12 and 20%, but which is low by historical standards. But at this level we're exceptionally low, and it talks to the fact that these markets really they're difficult to trade at the moment because we do need some volatility in order to make money as traders, and the fact that we've had such lacking volatility almost makes it feel like fishing in a river with no fish in it. It's been very, very difficult to try and navigate this market, given the fact that the volatility levels are so very, very low.
I mean, and Garth, just before we, what do we interpret from it? Is it you talk about complacency, but is that also, I mean, it's the opposite of fear, but is it maybe people just wondering where the direction or the catalyst for a rally, whatever it may be, is going to come from?
Yeah, I think it's probably just the fact that, I guess you've got markets with very, very narrow trading ranges at the moment. And we're talking particularly the US here, but now it relates back to all other world markets at the moment as well. Very, very low intraday trading ranges. And I suppose it is a bit of a wait-and-see type of market where we're waiting for something to happen. What I will say, and what is maybe you could argue even concerning about this, is that sometimes very low levels of volatility like this do kind of sometimes represent the calm before the storm. I'm not going to be a doomsayer, but it is actually a possibility that this very low volatility could be preempting a sudden expansion of volatility going forward.
Well, you do have 2 short positions, so if that is the case, then giddy up. But in fact, you're going to be putting on a long position on the top 40 this week.
Yes, very cautiously, I'm going long on the top 40 future here. So this is now an hourly graph of the June top 40 futures contract, and we're going back to about the middle of April in this chart here. So because it's an hourly graph, every candlestick pattern here represents 1 hour's worth of trade. What's quite evident is that we've been trading in an upward sloping channel over the last 6 weeks, or just over 6 weeks, and we are now at the bottom end of this channel. And you can see, certainly since the 2nd or 3rd week of May, this market's really been very, very dull. I mean, we've been trading honestly in a range of sort of 200, 300 points for the most part during that time. Very, very thin trading range, very dull trading activity. But we have met the bottom of that channel now. And if you look there, there's actually an overhead resistance area which comes through all these recent tops. And that comes in at about 45,000 on the top 40 future. Now, the thing is, my reading of this is that I think there's a fair likelihood that we're going to break to the top here. In fact, we did, earlier today, we did slowly start to break out, and then I bought. It's come back inside now, but let's just see. You know, markets don't typically peak out with a move like this. They typically peak with a rally and like an exhaustion move to the upside. And I suspect that this is preempting that exhaustion move. So
when you talk about peak out, that would be, sorry if I'm being stupid here, but a peak before the collapse.
Yeah, or before a more meaningful correction,
okay,
if we're going to get it. I mean, the thing is, every man and his dog out there right now is talking about this correction and this imminent correction and that the market's overstretched and whatever. And I know I've been one of those guys to some extent as well. But I think you also need to trade what you see. And what I see here at the moment is a market that's really consolidated sideways for about 2 weeks. And it is looking very, very vulnerable to breaking to the top side. And what I'd say is that in this 2 weeks, with all those, you know, doom and gloom sayers out there who've been shorting the market, expecting it to go lower, they've all loaded up on the short side already. A breakout through the top of that resistance will actually squeeze those shorts. And I think that's what would probably be the catalyst to push this market higher. And also very interesting to note, a different point, is that up at right at the top of this channel here, 45,800 to 46,000, there's a massive amount of call options written up at that level. 17,500 contracts in total at various different strikes in that area. It equates to about 8 billion rands worth of exposure on call options. So what's quite possible is that the market could actually edge up towards that area. And if the market starts to, you know, challenge those areas, you might very well find that option hedges actually have to buy, and especially given that we're so close to the futures closeout. Futures closeout is on the 19th of June, so that's around the corner.
Okay, so this is all stacked up, so you've entered a trade.
I have. I've gone, as I said, I've gone cautiously long. I've bought one top 40 future at 45,020, which is when it broke out briefly through the top of that overhead resistance. My stop loss is 44,620, which would imply that we have to take out the lows of the last 2 weeks or so. So I'm going to sit tight with this. It's a small trade. And to me it looks valid, but if obviously if the market starts to turn lower, I will cut that trade, and then we've got those put option structures on, which will give me participation on the downside.
Yeah. So Garth, in greater detail, if you can talk us quickly through the
All
mechanics.
right, so we've gone long at 45,020 with one contract. Every point on these represents 10 rand. Right, so that's effectively an exposure of 450,000 rand that I've taken. My stop loss is 44,620. That means my risk is 400 points or 4,000 rand. 4,000 rand equates to 1.34% of our total capital.
Okay.
All right. Target is 45,800, which means that my risk to reward ratio is 1 to 2 in this case.
Fairly decent.
It's okay. Yeah.
Okay, so right, so long and short of the market is quite a nice way to play it, I suppose. And Garth, just looking at the portfolio, it hasn't really changed much from last week, has it?
It's really been very static over the last few weeks. Those are the positions that we've got currently. We've got 2 options positions open. We've got our platinum ETF, we've got our Aspen long position, and then we've got that top 40 futures contract, which I've gone long of this week. And you can see our platinum and Aspen positions are actually at break even at the moment. They've done nothing for us.
Okay, well at least they're not loss making. Look on the bright side, Garth.
True.
So and very quickly to end off with, Garth, your next courses, you had the face-to-face session last week.
Yes, we did. Very successful. Now I've got a string of courses coming up during June. I'm in Johannesburg this week, the 5th and 6th of June, and then Cape Town, PE and Durban after that. I'm running a high probability trading course on the Friday of each week, and then the Thursday night before I'm running an understanding CFDs course. So anybody that's interested in attending any of these courses, please email me, garth@traderscorner.co.za, and then I'll send you the details.
Okay, great. Garth, we'll leave it there, and it'll be interesting to see what happens if there is a bit of a breakout, some forced buying of the markets. Thanks as always for joining us. Thanks. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.